The 2019 World Economic Forum this year is focusing on building a global architecture around the fourth industrial revolution. They have also likened very pressing issues such as geopolitical tensions and socioeconomic factors as very transformative, that the world is going through a period of significant change. What was lacking, however, has been the lack of attendance of many of the G7 leaders. Is this perhaps a leading indicator into what one can expect for 2019? This year's report highlights some of its top 10 global risks, to include increased and frequent cyber attacks, as well as severe weather changes. The question is, how does South Africa get itself ready to move into the fourth industrial revolution and to get itself ready for a world that is currently far more polarized than it has been in past decades? For South Africa and for Team South Africa, we would expect that the team highlights the importance of balancing short to medium term economic growth concerns, as well as looking out into the future to emphasize the importance of getting a labor force that is ready to move into the fourth industrial revolution. Obviously, this includes discussions around digital transformation and how South Africa readies itself to move into the fourth industrial revolution. Where markets are concerned, it was a 2018 report that highlighted cautiousness around some of the world's largest economies and where growth is concerned. We think that it will be in 2019 where these concerns are actually realized. The more dovish rhetoric from the Federal Reserve on their hiking cycle, as well as more muted oil prices, we think that these are factors that are likely to provide a little bit of relief for certain global economies. And while these might provide tailwinds for financial markets, there are significant concerns around US and China policy, in particular trade. Given this backdrop, we think that markets are going to continue to present increased volatility across most global financial markets. One merely has to look at the very high levels of global indebtedness and the worsening credit profiles of some of the world's smaller economies. These were economies that amassed significant dollar liabilities at a time when interest rates were at all-time lows. Of course, when the cycle turns, these economies start to feel significant pressure. While tightening financial conditions may have placed significant strain on these economies, we at Ashburton think that a more dovish Federal Reserve can provide a certain amount of relief for these economies.